I made an investing mistake. It happens to the best of us, and it's definitely something that happened to me this past week. And I just wanted to share the story about the mistake I made and also how I respond to investing mistakes. And this is probably one of the biggest investing mistakes I've made since I started investing for myself outside of simply investing in index funds or mutual funds. So this past week, I was selling some of my stock. I'm purchasing a new vehicle, and I was raising some funds for that purchase. Obviously, I want to put a pretty significant down payment down. I don't want to, take out a huge loan for a vehicle. Anyways, and one of the stocks I sold is Target, symbol TGT. And I sold it, I can't remember if it was Monday or Tuesday, but on Wednesday, Target went up something around $17 a share. So, needless to say, I've had this Target stock probably for 5 years. I've made a huge gain on those shares, but $17 a share is a crazy jump in price. Now, some people might argue that, timing the market, is a fool's game, and I agree with them. But I think we would all agree that, losing out on $17 a share gains is huge. Now, what mistakes did I make that led to this? Target announced its earnings, and they could have been positive news, they could have been negative news. And interestingly enough, it was positive news. I wasn't really thinking about it one way or the other. I was thinking about there's a lot of uncertainty in the market today, and I've had huge gains in Target and most of my other holdings. So I think it was prudent advice for myself looking at it to say, hey, let's take some money off the table here and use that money for something I need. The mistake I probably made was I should have probably waited until after the earnings announcement. I'm confident Target is a great company, and I sold my stock more so looking at I needed the cash than I needed to wait until the earnings news was released. And I think that's the number one mistake I made. Now, how do you respond when you make investing mistakes? I think the first thing you should do is learn from that mistake. I have a notebook here. Anytime I make a good trade or a bad trade, I journal about it and I write down why I made the trade, either the buy or the sell, and my thought process behind that. Now, I could beat myself up over this mistake, right? I cost myself some money. I'm really not. I mean, yeah, the additional money would be great, but it is what it is. At the end of the day, I've made a huge gain on Target, and I think it's something that more so that I can learn from. The second mistake I think I made was I should have had some cash on the sidelines already, right? We had a market that went up huge. Should have pulled some money off the table earlier and had that money preparing for the vehicle purchase. So when you need money quickly, you really make poor decisions with investing. So ideally, I probably should have had more money, say in a bank account or a savings account, somewhere that wasn't tied to a trade having to be made in a short period of time. By needing X amount of dollars for this purchase, I had to determine which of my stocks I wanted to sell. And to be honest, I really didn't want to sell any of them. Right, I buy good quality companies that have long term prospects of doing well, and they're companies that are also, most of them pay dividends, and Target pays a pretty good dividend, 2.5%, as we can see here. So, I think that's another, not necessarily a mistake or a lesson learned, but something to consider, right? do you have money on the sidelines that if whatever your big expense or emergency is that you can use without having to sell a stock? Again, it's not a huge mistake for me. Money's money. I have other investments. I simply sold Target when maybe I should have sold something else. But at the end of the day, it just goes to show you can't forecast what the market's going to do on a day-to-day basis. Long term, I'm still confident that Target's going to do well, and by having this one day jump of $17 a share is it's a blip on the radar in the long term outlook on Target and in my investing journey as a whole. 20 years from now, I'll be like, probably won't even remember a one day jump. But there are some lessons to learn, and I think that's what I'm taking away from myself, and that's what I'm sharing with you guys. And I think another reason that I like to share stuff like this is I think there's too many YouTubers that look like everything they touch turns to gold, right? They get 200,000 subscribers, they make videos that they make X amount of dollars online from you, the folks that watch the YouTube videos, watch the ads that they get paid for. And, I don't think enough of them show the mistakes that they actually make, right? At the end of the day, we're all human. Humans make mistakes. We're not robots. We're not perfect. We're not programmed to do exactly what, somebody tells us to do. So I think it's good. It's good to, own up to your mistakes. Thankfully, it's not a huge mistake. It's not a crippling mistake for my financial fortunes. But, it is what it is. So I hope you guys enjoyed this video. Don't forget to subscribe.